Money Masters and Treasure Hunters, welcome to the July 2nd terrific Tuesday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for the week while he's out recharging, making his B to a C of his next A to B equals CD up in life. Just as our markets, they are still making their B to C, but in this case, it's an A to B equals CD down. For those of you not familiar with me on the Anchor in the morning, kick things off at TFNN at 9 a.m. for the first 2 hours of the trading day. It's a real honor and privilege for me at that time of the day to tell you where price is and why, but more importantly, where price is going by using a set of trading tools that include leading indicators such as that lightning bolt pattern, also known as the A to B equals CD, Fibonacci expansion and retracements, also known as Gartley and butterfly patterns, swing point analysis, volume analysis, divergence between price and other indicators. I've got a newsletter service called Mastering Probability. It's out each morning at 8 a.m. It covers the futures market, the Forex market, commodity, stock markets with trade setups and a thorough review of just different chart patterns. And for the first time ever here at TFNN, we're offering this newsletter service to you for a 2-week free trial. It doesn't matter whether you've used this service in the past or not. Everybody qualifies for it. You can test drive it for 2 weeks absolutely free. Also, on the homepage of TFNN, go check out my special report, The Trend is Your Friend Until It Changes. This is a very timely report. It is something that you want. Enough about me, though. This show is all about you, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool that I call starting the process of change. Now, the biggest challenge to each of us is in the area of personal development. And the process of change begins with understanding that it's not what happens in the world that determines a major part of our future, because what happens in life, heck, it happens to all of us. The process of change begins when we break our old patterns, and that means doing something different than what we've already done. Question: how many of you are going to the same restaurant tonight that you've been to dozens of times, or maybe eating the same thing you do for Tuesday dinner? Maybe you're going to be watching the same television show tonight. If you're doing the same thing, say yes out there. That's it. Now, starting the process of change, that means doing something different. It means becoming an explorer. Look, if you'd like to get more out of life, then realize that what it is that each of us have in our life right here, right now, is everything we've attracted into it because of the person we have become. If you want more, you've got to become more. Maybe it's a book, a workshop, a special report, a newsletter service that can change things up for you. Starting the process of change begins on the inside. It's always our way of thinking, and that means don't wish things were easier. Wish to become better. Don't wish for fewer problems. Simply wish for more skills. Well, let's go check out these markets here. We had the Dow finish off 42 points out at 14,932. S&P down, well, S&P was flat, finished down 88 cents at 16.14. I guess we can say that's a doji day out there. Same thing on the composite, off a buck at 34.33. Russell 2000, another doji, down 37 pennies. What's a doji mean? Well, you know, when a market is moving up, a doji is a sign of a market that is losing its direction and that it is tired out there. So a lot of meaning can come from these candlesticks. We're going to take a look at those. We had Apple finish up 9 today. Google off $5. Leading the charge, the upside was Apple. Just behind that was Noodles and Company. That's an IPO that's out there. It was up 22% today. Up $8 and change. Chipotle Mexican Grill, that was up almost $8 as well. I believe it's some of the guys, some of the gals from Chipotle that went over to Noodles and Company out there. We had Puma Biotech up about 12%, up $5.80. We had DaVita Healthcare down about 6%. Lynn Energy off 18% today because of an SEC investigation out there. Mead Johnson off $4.50. And if we take a look here at the commodity sector, we had gold off $14, trading out right now at $12.41. Silver down 25 pennies at $19.32. Both of those pulling back on light volume. Light sweet crude up a buck 40 at 99.38. Natural gas up 7 ticks. Our calling number's 877-927. 6648. Give us a call. We can take a look at your stock. Let's start off by taking a look at the S&P 500. If we take a look here, the S&P today getting to a high of 1624.26. The high of the downdraft was 1624.62. Got those two numbers at the end there reversed. Still coming into a downdraft that's got major volume, doing it on light volume. You get a doji today. You can take a look at these wicks here over the past couple of days, a shooting star candle. That's a reversal signal. Here yesterday, a doji today with the market getting tired. It still looks like the S&P 500, coming into a shortened trading session that we have tomorrow, another holiday, lighter volume day on Friday. I think it's still the opportunity here for the market to push up, and that would be into about the 1638, 1635. The target should be at least the bottom of the June 19th level. That low is 28.91. That is in the S&P 500. Let's go take a look at the Dow. Let's take a look at the IWM. Then we'll go switch over into the ETF structure. If we take a look at the Dow here, now the Dow has been struggling to even get up and test the top of that downdraft bar from June 20th. That level is 15,105. Was not able to get up there today. Really an inside day. Tested, you could say, really tested the lows of yesterday, the last couple of days. Rejected those areas on lighter volume. We'll take a look at that inside the Dow Diamonds. That still sets up moving into potentially 15,163. I'd like to at least see it just get up to the bottom of that June 19th bar out there at 15,112. That is on our Dow. Let's go take a look at the Russell 2000. We'll take a look at the NDX as well. And then, and you know what we're going to also do? I'm going to take a look at the VIX index and help to answer the question as to why the markets are really just building the B to a C of an A to B equals CD down. But let's take a look at the NDX here right now. The NDX testing for the second time the top of that gap from June 20th. That top 29.3810 out there. Today it got up to a high of, let's see here, 29.4593. Closed out with really what's called really a spinning top, high wave type candle out there. So we're rejecting, the NDX is rejecting, this downdraft area, doing it on lighter volume. It's possible. There's a potential that the top is in. But I think with a lighter trading session tomorrow, the bulls ought to have a free run tomorrow and Friday to push it up, close up that gap, maybe in the NDX, get it up to as high as 29.66 out there. We're going to go ahead. That's actually what I want to do right now. I'm going to go switch over. Instead of going to the ETF structure, what I want to do is I want to answer the question, why is it that Steve believes all we're doing is making the A to B, the B to C of an A to B equals CD down? And what I'm going to do here is you can do this on your charts at home. If you've got the indexes, I'm going to pull up on the top of my chart. I don't know if you can do it like this, but I'll do it for you. If you take a look at the top of my chart, assuming that you're watching on Tiger TV, maybe you're checking out the archive of this show, and what I've got on the top of the chart here is the VIX index. Now, in the VIX index, at the bottom of the chart is the S&P 500. Now, there's a couple lines. I'm going to get rid of one of the lines here on the VIX index. I'm going to get rid of the 200-day exponential moving average here. Give me a second to go ahead and cut that out. And what we're going to look at is the 50-day exponential moving average. We're looking at a daily chart. Now, what I'm going to do here is I'm going to take us all the way back into 2009, coming off of the March lows in 2009, just so you can see how this works. This here is worth its weight in gold for you, because maybe no one has actually taught this technique to you. So we're going to go to March 9th of 2009. Now, March 9th, 2009, actually March 10th, you had the VIX dip below the 50-day exponential moving average. All, and I mean all, folks, any kind of rally, any kind of extended rally, any kind of uptrend, any kind of bullish move is only going to occur when price in the VIX gets below the 50-day exponential moving average. Take a look at this coming back to 2009. That blue line there, that's the exponential moving average. Take a look at how price here in the S&P 500 traveling higher. You'll see some times where the VIX went ahead and popped its head above the 50-day, and each time you do that, you see a little bit of a pullback here. You can see it coming into the time frame of October in 2009. You see a little bit of a pullback, but once the VIX gets under that 50-day, you start to see the markets motoring ahead. Take a look at that. Go take a look back here. We had a little bit of a sell-off coming into February of 2010. Now, I'm going to fast forward us because we've got about 15 seconds before this break. Oh, I can't do it because of how I brought this down. Okay, there we go. Now let's take a look at it. and blow this up here. You can see right now the VIX still above the 50-day exponential moving average. The VIX here, by the way, folks, went above the 50-day moving average on May 22nd. May 22nd is the high in the marketplace. As long as VIXY stays above the 50-day EMA, all we are doing is building the B to a C of an A to B equals CD down. 877-927-6648. Give us a call, folks. We'll be right back.